Welcome back to Business Talk, a new online business talk show presented by BusinessTech and hosted by me, Michael Avery. In this series, I'll be interviewing high-profile executives about the impact of the lockdown and a way out of the mess for a prosperous South Africa, something that we're all vested in. Now, on this show, we're going to be discussing not only the impact of lockdown, but life after lockdown, how companies should adapt, and what can be done to create a thriving South African economy. I think that's something that we'd all like to see after decades, or at least a decade of stagnation. My next guest joined the Standard Bank Group back in 2000 in the project finance division of Standard Corporate Merchant Bank. So it's been 2 decades that he's been with the organization. He was appointed to the Group Exco a year thereafter, and until 2006 was managing director of Stanbic Africa, and was appointed Chief Executive of Personal Banking back in 2006. In June 2008, he was appointed Chief Executive of Standard Bank South Africa. And then in March 2013, he was appointed Joint Group Chief Executive of Standard Bank Group, a position that he held alongside Ben Kruger until Ben stepped down in September of 2017. He then resigned as Chief Executive of Standard Bank South Africa in January 2018. Pleased to have Simphiwe Tshabalala, Chief Executive of the Standard Bank Group, join me to talk about banking and the economy, as Standard Bank Group is also revamping its management structure and starting some new business units to better meet the needs of its customers and generate fresh sources of revenue. There's also facing stiff competition from tech platform companies who see Africa as a vast untapped growth opportunity. Sim, welcome to Business Talk.
Michael, thank you so much, and thank you for that wonderful introduction. It's always a pleasure to talk to you, and thank you very much for the time.
Now, I was having a look. The last time banks were this cheap at a share price level, a certain president wasn't crossing the Rubicon, and I was actually in primary school. Now, it's an interesting environment, to say the least, that we haven't seen banks this cheap in almost 4 decades. Let's just start with the impact of lockdown on Standard Bank and consumers in general, and how life is actually manifesting post-lockdown.
Well, Michael, the points one could look at and talk about. The first one clearly is the direct impact lockdown has had on Standard Bank and its staff. So we have roughly 80% of our people working from home. In the 9 months since lockdown, we've had a lot of activity in our group, notwithstanding lockdown. We've changed our payoff line. We've introduced a new a people promise. We've modernized our internal structures, as you alluded to a little bit earlier. We started a new journey and a partnership with Salesforce. We've upgraded our app 6 times. We've rapidly expanded our bots and artificial intelligence, and we've piloted many new products in the rest of the African continent. Now, last month, and I know that you read Forbes as well, last month Forbes had a fascinating article where they were analyzing the response of companies to COVID, and they spoke about 2 great companies, Goldman Sachs and JP Morgan. And they were analyzing how people have responded to the pandemic. And they gave a checklist of what you need to do when you respond. That checklist includes what you need to do in terms of communication, what are the best practices in communication, how you should be talking to your people, and so forth. But the gist of what they say, just like the World Health Organization asks us to do, is you must focus on your people. We have spent a lot of money and resources in making sure that our people are well protected, that they are practicing social distancing. We've bought PPEs, we've bought perspex, we've bought people masks, and we've applied these principles quite strictly. Michael, in terms of where this goes, I'm sure you'll debate this with me a little bit later, but it's pretty clear that a lot of the trends that were happening before COVID are definitely going to be accelerated. And so what are we seeing? We're seeing more digitization. We're seeing more hybrid work. So it's pretty clear that given the fact that we've had 80% of our people working from home, it's quite possible now that a large proportion of our workforce will be at home. A large proportion will work 3 days a week in the office, and a small proportion will work perhaps the full 5-day week at the office. In my own case, I was telling you before we started, I've been to the office 3 times since early March, 3 times. The first time was during our AGM, and if you recall, 3/4 of that AGM was seized with matters around EGS, and in particular, the environmental issues. The second time, a worker put a spade through our fiber, so I had to rush to the office. And this morning, as I was getting ready to sit at my desk, it went haywire. I jumped into my car and came to the office. All of these things have got profound implications for business. Let me close and let you ask me the next question by saying this. We've seen a dramatic move to digital channels. Less people going to the branch of necessity because of COVID. And just the numbers are staggering, the number of people that have adopted our electronic channels, which bespeaks a permanent, I think, diminution of use of physical channels, but an increase in electronic channels. The same, I think, you will see in retail businesses and in other businesses. Thanks, Michael.
And I think, Sim, what you've touched on is so important on multiple levels. I think at a country level, it's so important we get our infrastructure right. If we're going to harness the potential and allow companies to compete with the rest of the world in this global marketplace, because technology has lowered barriers, we need to ensure that we can get the basics right. Have a fiber cable that doesn't go down if it rains, or make sure that there's power, and that we can keep the coal covered, and so that businesses are powered to keep on operating. But as a bank, with a retail presence in 20 African countries, in some of those markets, particularly here in South Africa, you're being challenged by newer banks. How does Standard Bank compete with banks that use fewer people and that are leveraging technology to deliver to the retail banking client from first principles, while Standard Bank has these so-called legacy systems and spaghetti systems that we know the incumbents have?
So, Michael, I think you're right. So Standard Bank was formed in October 1862. So it's an old institution. I hope you're not going to say to me that it shows, but it's an old institution. It's been around for a long time. We've got layers upon layers of old systems, old processes, and old infrastructure. But there is a benefit to being old. We've been through wars, pestilence. We've got directly relevant memories and experiences in our group on what happened during the Spanish flu and how to respond. Second point to make here is we have the privilege at Standard Bank of being in rude health. We have got a well-capitalized group. Our capital adequacy ratio is very high. It was at roughly 12.6. Common equity tier 1 was 12.6 at half year. We are liquid, and our clients know that. And we've stood by our clients during these difficult times. And it's an important point to make. We haven't run for the hills. We've stood by our clients in these difficult times. And therefore, we've positioned ourselves to be more competitive post-COVID. That is relevant to the question you asked, because our clients want to know, are we going to be with them during good and bad times? And we at Standard Bank are able to prove that we're able to do that. So we've got a strong balance sheet, strong capital adequacy, strong liquidity, and we've stood by our clients during the most difficult times. However, it terrifies me that there are new entrants that are able to stand between us and our clients because they provide our clients with better service than we do. That is an indictment on financial institutions, and it drives our response. So the Standard Bank response has been along 2 vectors, I suppose. The one has been, we've spent a huge amount of money on our core banking systems. If you look at the intangible on our balance sheet, it'll make your eyes water. I mean, it's over 20 billion rand. So we spent a lot of money then on core banking systems and on operational efficiency. The phase we're in now is a huge investment on the customer interface and the customer experience. We've been rolling out new products, new channels, new apps, And that is in response to these new entrants, which, as you correctly point out, range from new banks, modern banks in South Africa like Discovery, Capitec, and so forth, but also increasingly the big techs and financial services. You saw The Economist just the other day. That behemoth is turning its attention to financial services in emerging markets and on the African continent in particular. And they will be providing our clients with the experience not dissimilar to what clients are used to from Google, from Uber, and so forth. Our view as Standard Bank is that we've got to provide our clients with experiences that are equivalent to those that are provided by the big techs. And hence the announcements that you heard and that you are alluding to earlier on. A huge focus, therefore, on customer experience, leading our bank and our institution through clients, but also a huge investments in IT and tech. Because frankly, what's the difference between a financial institution and a big tech? It's just that we are regulated. We both have to spend a lot of money on technology, spend a lot of money on data, spend a lot of money on the customer experience. And therefore, in the competitive arena, we've got to respond to incumbents, large financial institutions, to new entrants, and to the big techs.
That's an interesting point that you raise, because if you look at what the bank has, you already have a network, millions of your customers logging into a platform that so many banks are developing, which is the banking app. I suppose the next evolution or question will be, how do you now make that jump? And in terms of customer experience, ensure that you are delivering that delightful experience to customers. Because I often look at banks and I think, gee, that's where the word silo was invented. If I want to go and talk to a bank about my credit card, but then want to talk about my mortgage, then I get put through to another department. There's another set of security questions. And I often ask myself why all of these things can't be integrated. I know it's complex and banks are regulated, but how are you thinking about now taking this big network that you've got, this client base that you've got, and fighting back against some of those competitive forces that are driving you on?
So a couple of things, Michael. So first, start with the theory of the firm. So all of us read the same textbooks, we read the same magazines, we talk to the same consultants. Our view is that the world is shifting very, very quickly from the old-fashioned way of thinking about business and banking, thinking of it in terms of hierarchies, business units, and so forth, and increasingly thinking about business on the basis of network theory. So that's the first fundamental point to make here. We've embraced that, and we think that it is relevant that you've got to think of a financial institution as a network with a series of nodes, and you've got to have that network functioning better than the next guy. Secondly, we have a platform, like you say. And in fact, you are aware, Michael, that the root of the word bank is actually banca, which is a platform on which, in the Roman Forum, people used to bring money to the money changer and put it on his banca, on his platform, and he would take that money and on-lend it to the merchant who needs the money. It's no different to what we're talking about now. But the reason why it is so important to be more deliberate about it is that in the last couple of decades, business and financial institutions have become a lot more complex as a result of, in our case, the acquisition of businesses. So the bank historically bought home loans businesses, card businesses, and so forth, and lumped those together. And those systems were never really integrated. Another contributing factor has been that banks were run along business unit lines. So the theory of the firm was along business units, which was legitimate. In fact, it continues to be legitimate. Our bet is that the winners are going to be those that are able to effect networks better than the next guy. So, and again, emulating the likes of Google, Amazon, and so forth. In our case, we've said, okay, we've spent all of this money integrating the back end. So that's the first step. So improve the platform, the bench on which we're going to be bringing together buyers and sellers, importers, exporters, excess units in the economy, deficit units in the economy. using our networks, our IT system that we have so heavily invested in. But importantly, even more importantly, is we have got a vast amount of data. We need to harness that data and harness it better than the next guy, better than the competitors. And so huge investments then on the use of data and how to use that data in a way that is improving of the customer experience. Let me close this part of the discussion by saying this. It's pretty clear that in this phase that the world is in, we're in the phase of digitization. Artificial intelligence, bots, and so forth become important, but so does the human spirit. Our bet at Standard Bank is that the combination of that digitization and improving the customer experience by becoming more deliberate about our relationships with our clients is going to improve our competitiveness. I'm delighted to say that our net promoter scores are improving. Our competitiveness is improving, and it's showing up in our numbers, and I'm delighted at the investments and all those changes that we've made.
So clearly a time of great opportunity in the wake of this crisis. Super insights. We're going to have to leave it there. Simphiwe Tshabalala here on Business Talk.